Welcome to Rising Tide Startups, where we chat with startup founders and solopreneurs just like you from all over the globe. During our chat today, picture yourself starting your own startup journey. If our guests can do it, you can too. Every episode of Rising Tide Startups is sponsored by Podbrand Media. Let Podbrand create and host your company-branded podcast. Learn more at podbrandmedia.com. This is Rising Tide Startups. My name is Kevin Pruitt, and I have a special guest with me today, Joris Delanoue. Joris, thank you for joining us on Rising Tide.
Thank you, Kevin, for having me today to talk about Fairmint, to talk about tokenizing the world.
I asked him before we hit the big red record button, if we can almost kind of split this interview in half, where we're going to talk about being a founder and running a company on the part of that. And the other side, we're going to, touch in the blockchain space. And we have a lot of guests that, you hear that all the time. So you have a lot of guests that are going to be listening, or a lot of listeners are going to be listening to this episode that may want, have questions and want to know about this. And at the end, we'll give you a chance to, kind of share where people can get in contact with you and learn more. But Joris, if you and I met at a networking event, how would you introduce yourself to me?
I'm Joris, French who moved to the US to change the capitalism and to make it better, like the version 2.0 or 3.0 of capitalism. I've been an entrepreneur since more than 15 years now. Time flies. And I still enjoyed the ride a lot with all the highs and lows that it brings. I think that if I would present myself at an event, I would simply make sure that you understand that I believe more in entrepreneurship than politics, for example. That as an entrepreneur, you can today particularly change the world more than by being elected, and simply because you can have an impact on billions of people now by what you build every day, by the value that you decide to put at work with your vision. And then if I would go deeper into what I do today, I would simply say that I'm bringing equity on the blockchain by turning cap tables into smart contracts with one simple goal, making sure that equity moves as code.
Wow. Just hearing you say that, it's like, man, we could stand a lot more people moving to the States with that mentality. So bienvenue, mon ami, anytime. But talk about kind of the genesis of Fairmint. What was the itch you were trying to scratch, in essence, that you thought, hey, we've got to do this? Was this an internal problem that you were trying to solve and it just kind of grew into something? Or talk about the origin story here.
So I think everything started back in France when I had my first businesses that I exited because I was on both sides. I was an investor as an angel in multiple companies. Mm-hmm. And at the same time, I was running my own business. And it was extremely hard to onboard people to my cap table, whether they were employees, contractors, partners. I was trying to find ways, to integrate them, but it was extremely complex. And at that time, people were not educated to stock option in Europe, not as well as in the US, where it's common practice for decades. And so that was a big frustration. And on the other end, as an investor, I was seeing that I was investing in a company, and 5 years later, nothing happened. Everything was completely locked, no IPO window, no real M&A play. And I was like, oh, well, there is an issue here. How can I fix that? And that's when I decided to leave France and go to the US, go where capitalism is. I joined the Singularity University, and my goal there when they were running their exponential program was to join the program. You had to build something that would impact more than 1 billion people over the world.
Wow.
And a lot of the projects were around food supply, energy supply, water supply, space, or even microbiome. And I came and I was like, hey, I'd like to fix capitalism. which impact a lot more than 1 billion people over the world. And so everything started like this. Like I said to my wife, "Hey, let's move to San Francisco for a while. We see how it goes." And we started to our US trip, our new journey, and everything started with an exchange for startups using SPVs. So the idea was to say, "Hey, let's bring an SPV to the cap table, and let's allow people in the SPV to move their asset without messing with the cap table itself." And summer 2018, while I was building that, multiple people suggested to chat with Thibaut, my co-founder and CTO, and basically we knew each other for a long time, but we never sort of working together. And Thibaut came back to me saying, "Hey, here is the blockchain technology. I'm deep into Bitcoins and Ethereum for years now." And he explained it to me. And the parallel between my previous business in cloud computing with all the shift of infrastructure from private infra to the cloud, with what he was telling me, it was resonating a lot.
Yeah, it made perfect sense.
That's a groundbreaking tech.
Yeah.
If we are able to change the rails with better rails, then we are fixing a lot of the issues that we see today. We are deintermediating. By deintermediating, removing a complete part of the cost structure. And if the cost drops, then you offer a broader access, or you simply allow more people to use that. And so that's how Fairmint started in 2018, and then got incorporated in 2019. And we are now 6-7 years later, with finally the world seeing what we saw, which is blockchain technology is a superior tech. And because of this superiority, most of the activities that were in TradFi will move on chain, because, sometimes I like to compare this with the cost structure. Like initially, infrastructure was a CapEx. It was capital expense. Then with the cloud and all the mechanism of, monthly expense, it became OpEx, operational expense.
Yep.
But with the blockchain and the tokenomics mechanism, a company or a community that would build this infrastructure with the right tokenomics can turn this OpEx into a profit center. And so what before was costing you money to run and operate now can be actually a revenue stream. Exactly. Yeah. And I think it's fascinating to see this shift, because that's a unique opportunity to move to the on-chain world for many big players. And what we saw with Ethereum and all the L1 or the EVM over the last years is very exciting. You see a lot of traction, you see a lot of volume increasing, but at the same time, when we will start seeing TradFi moving on chain, the AUM that they will bring will be so huge that all the curve that we see like this will be completely flattened. But at the same time, it will be a completely new wave. And I think it's very exciting to see that today.
There is no doubt about it. I'm going to ask you moving forward that when you use like an acronym, that maybe we assume that either the host or the listeners may or may not know what that is. So let me go back to you're talking about, the cap tables and initial investors. You use the term SPV. I'm not familiar with that term. Tell me what that is, and that gives me a little better context moving forward. But and I'm really curious too, after you answer that, about the name of the company, because I'm thinking, Fairmint, I'm thinking like equitable, just currency, almost. So, but yeah, I'll let you answer. Fair and equitable in English are very, very similar. So
that's a great question, actually, because indeed the name Fairmint came from discussion. I remember October, November 2018, where initially we were leaning to find ways for more people to access to the financial upside of businesses. And so there was this idea of like minting, so minting a token, minting a currency, and making it more fair in the sense that more people can access it. So that's the genesis of
No,
Fairmint.
that's
Uh,
exactly what I was thinking. So
yeah,
yeah,
so
yeah,
that's good if you capture it. And back to the SPV question. So SPV is special purpose vehicle. So it means that you are pulling into one single entity multiple investors,
right.
and you give the keys of this entity to either the CEO himself as a proxy holder,
Yep.
or to a third party that is in charge of managing and representing the interest of all the members of the SPV. It's like creating this vehicle where everyone is pooled and you just see one vehicle, but behind there are plenty of investors.
And how is that different from, is it a SPAC?
Yeah, so SPAC is slightly different in the sense that the SPAC is meant to go public. So it's also a special purpose acquisition company.
That may not have a target yet. Right. Yeah. It's kind of undesignated almost funds type thing.
Correct. And it's meant to go public in the sense that it's meant to file to the SEC to effectively become a public entity. When the SPV is purely private.
When you got the idea for Fairmint and kind of, wanted to disrupt capitalism for 320 million of your favorite Americans, did you, were there other competitors out there trying to kind of arrive at the same place where, where you thought, okay, we want to be them, but we want to be better. We want to be Amazon, but we want to deliver our things on time and in the right address and, that type of thing. So what was the early days like in Fairmint?
Well, very early days, there were companies like Equidate that became Forge, that is still doing secondaries very traditionally. And then in the blockchain space, we saw, all those waves of ICOs and social token, governance token, NFTs,
Yeah.
meme coin. And so many investors were pushing us to move offshore or to embrace a new form of token like the one I just mentioned, because they thought it would be an easier path. After 7 years, I believe that it was the right choice to just like stick to what we want to do, equity securities on chain. I know that a lot of the people that were trying to replicate that or do that dropped in the
Mm.
middle of the game, because that at one point you just like face regulation.
Yep. Yep.
And I still see that with lots of projects, that start to do tokenized public stocks, for
Mhm.
example. And they go all over the place until the day that they explain to you that they are not in the US and they are not in any country that have sanctions against securities laws abuse.
Yep.
Well, yeah, because they are literally doing securities without complying with the most of the securities laws in the world. And so those projects, they might be raising a lot of money fast, but will they last? Like,
Hmm.
they be part of a wave and then everything, they stop because they see it's hard. They stop because they see that they can be sued,
Hmm.
or they can be considered bad actor. In that case, after 5 years, they won't be able to raise any more money.
Yeah.
I mean, there are plenty of behaviors that we see. For the anecdote, in December 2018, one of the first hiree that we had was an external counsel, Collins Belton. And Collins has been instrumental in all that we've been building. And I remember very well hiring him and saying to him, like, hey, both Thibaut and I are father and husband. We can't sleep in jail, not one night. And we want to make sure that you draw the line for us, that we keep pushing the boundaries, but always on the right side.
Well, that's been
And
kind of the problem, though, hadn't it? It's that the regulation hasn't been clear. It's almost like you're trying to operate and trying to guess where the SEC and other agencies are going to land, on
Yeah,
regulation.
I have a slightly different view of this in a sense that clarity seems to be already existing.
Mm.
But a lot of people don't like what's written right now. So they try to change it. And by trying to change it, they do that through the lack of clarity
Oh, yeah.
perspective.
That's their argument.
Um,
Yeah.
so if I look back like the last 6 years, we've been building a product with the US securities laws as specification. And so, yes, I see a lot of things that needs to be changed
Mm-hmm.
to make the market more efficient, to allow agents that are willing to be good actors to do a better business, more sustainable and more equitable for all the players. But at the same time, when I see something that seems to remove the protection that an investor should have, I'm very critical as well. I'm like, oh, okay, if I objectively see that, I understand that some people want to go this route, but at the same time, this is posing some risk.
Yeah.
And this is why I love the approach of some people like, for example, Echo Plays, which is funny because Echo was also started with Collins as external counsel at the beginning. I like the approach of saying, yes, we are offshore, but for the US, we will put the sales of our token under a US securities exemption. We don't think that what we sell is a security, but to make
Right.
sure that we respect the protection of US investors, we will accept the rules to play in that game. And I think this is a massive shift from some players. And so I value a lot this type of players. Funny enough, yesterday they got acquired for almost $400 million by Coinbase, and massive respect to the entire team that has built Echo. I love to see that type of teams and projects
Mm-hmm.
on the market.
And let's see that kind of growth with Fairmint.
What I like here is it create the category in a sense.
Mm-hmm. Yep.
It send a message to the world like, hey, there is a category here. It's on-chain capital formation. And it's real, it's big, and it's promising. So yeah, it's aiming to that.
I look at Fairmint, and you talked about what was kind of the original driving force was maybe the complexity of the cap table, or problems around that. But was it that, or was it giving a more equitable solution for investors, like giving the everyday common man the opportunity to invest in these types of investments as well, or is it a dual purpose? Does one drive the other? Are they mutually exclusive? How would you describe the kind of the backbone?
The market evolved a lot over the last 7 years. Like most of the thing that we started with became a commodity.
Right.
And for example, 20 years ago, incorporating a company, raising capital for the pre-seed, seed, and Series A, and managing the cap table, we were talking of hundreds of thousands of dollars to finance. Today, to do all that, if you do it with Fairmint, it will cost you $500. Okay, so that gives you
Quite a
an idea
difference.
of all the shift that happened in the last 10 years. The first 4 years of Fairmint was extremely hard because we were among the first to do equity securities on chain.
Mm-hmm.
And the cap table vendors didn't want us to appear on their tool, despite being legit, despite having multiple memos from lawyers explaining that we were effectively equity. And so 2.5 years ago, 3 years ago, we started to work with top US securities law firm on a new initiative called the Open Cap Table Coalition.
Hmm.
And the idea was to say, let's build the standard for cap table so that law firm A, law firm B, law firm C, vendor A, vendor B, vendor C will all talk the same language when we talk about cap tables. And so that we can easily move to another agent without losing everything, without restarting the work on spreadsheet and spending again $50,000 in fees. And that has been game changer. It's an inflection point in a sense that the whole industry, at least in the US, came with this standard. It became a format, OCF, for Open Cap Table format. And it became the backbone for the source of truth of businesses, at least for private for now. And as it's extremely complex to manage a cap table, that you have different liquidation preference,
Right.
you have different waterfall mechanism. Not all dollar that was invested in the company will earn the same at the end. And people are not so knowledgeable on that. They discover it sometimes too late. How many founder sold their company and they discover at the end that they get almost zero. Why? Because someone was having a preference like 3x. So they invested 10. And when everything happened, they are the first to get 30. And then you split the rest. But sometimes the rest is nothing. And so what I love with this initiative, the coalition, was finally we talk the same language. Finally, we can port whatever we were doing on any vendor. And this is what we turn into a smart contract, into an automated mechanism that makes it so easy to move, so easy to issue, that you start cutting the cost. And that's how you end up with managing a cap table as a simple feature and not a product anymore. And
does it help with dilution at all? Or does it help with, I mean, is it, or is that a separate issue? I mean, like how do investors getting diluted over, multiple rounds or whatever? Does that in any way help the investor, against that problem?
It helped them to see and understand.
Mm-hmm.
And so that's one
Doesn't
of
change the equation. It just
yeah,
clarifies
because
it
in the
for me.
past, you know how it was. Like if we look at the history, before you had a paper share, and with the paper share, you receive the paper share, you own it, and you start maybe to go and give it to the bank. Then was the paper crisis, in the 70s, where everyone was like, okay, we are swamped in all those papers. Let's solve that with computers. And they started to create at that time the DTCC and all the intermediaries that were dealing with that. So you didn't have your share in end anymore.
Yeah.
You were giving it to someone else. And then came internet, Web 1, Web 2. And with Web 2, what happened is a centralized agent started to say, hey, you know what? You don't have your paper share anymore, but I will give you a PDF certificate. Based on my system, what I see from my database, I will give that to you in exchange of payment every month. The problem that happened with Web 2 is that when a company stopped to pay those vendors, they press the delete button and your shared PDF worth nothing anymore.
Yep.
And so they were literally locking up their own customer in their walled garden. What the blockchain is offering is a go back to the paper time where you are able to hold and custody your asset. But without the hurdles of the paper, because now it's entirely on chain, and without the hurdle of the centralized agent, because now it's on the ledger. So even if the agent like Fairmint dies tomorrow and doesn't exist, you will be able to still read and see and access your active position.
Still have your own wallet or whatever that you would have. Do you see the entire equity market moving in this direction? I mean, it almost seems like a foregone conclusion.
Yeah, it will take time. Like we talk about, it reminds me of the discussion of, do you think that everyone will get rid of mainframe and AS400?
Mm,
Well, I can tell you, some people are still making a lot of money with COBOL developers and maintaining mainframes, because when you have something that works, why would you change it? Today, I think it's not trivial. I think a lot of the new businesses, a lot of the new markets will move on chain because it's obvious, it's superior in terms of tech, and it's cheaper in terms of cost. So yes, a lot of the activity of traditional finance will move on chain. Will it be everything? Probably not, or not too fast. But will we see a big wave of new asset moving? Yes.
I'm thinking as you were, talking about that, I was kind of thinking back. My mind's only on one track. I'm too old to have multi-tracks. So, but I think back of the discussion we talked about with the accredited investor, you
Yeah.
know, does this change that? Like, will this open up the ability for for anyone to invest, or is that still determined by the regulatory structure that says you have to have this much, the in investable assets, to meet a certain threshold or whatever? Or is this going to virtually, open up the whole investment in such maybe small pieces that, anybody could grab a piece?
So let me answer in two phases. One, the regulator understand that something is broken.
Mm,
They try to patch it and fix it with the Jobs Act,
yeah.
but unfortunately, and sorry to say it this way, but I think it's one of the worst piece of legal ever written, because 15 years later, it doesn't work. And people that are not able to get savings should not be easily exposed to highly risky capital investment.
Yep.
And one of the best strategy to avoid that is to pool things, having a basket of things so that you invest into 100 companies and not just one. But
Hmm.
when you can invest only $1,000 a year and you put it into one single company through a crowdfunding portal, the chances that you succeed are extremely low.
Yep. Hey, we do that with the lottery though, right?
Yeah,
I
yeah, but here we talk about securities.
yeah.
And if we want to protect people, we have to come up as a market with, and as an industry with better solution and with better assets.
No, wait a minute. You
So
said this wasn't a security, right? Or
can you repeat? Sorry.
you said this wasn't a security, right? Now that
Yeah,
we're
yeah. Here it's not a game. It's not a lottery. We talk about securities, and so as an industry, we need to come with a better solution, with a better asset to address that. So I think the regulator is working on it to make sure that probably they will make it more flexible on the accreditation rule. And they started to do it. Now if you are an employee of a fund or
yeah.
you are knowledgeable enough, you can be considered accredited. I think we are shifting also the era. We are moving from the era in the 1930s where no one knew anything and no one had access to anything, to the data era, internet era today, where you can read and know and track things a lot more. So
Mm.
a lot more people that might not be accredited based on their wealth should be accredited based on their knowledge. And it's funny because I'm writing written input for the crypto task force right now about that, which is precisely focusing on the knowledge-based type of accreditation. And you can be knowledgeable on multiple offering, but maybe you can be also considered accredited on just one offering because you know this product, because you know this company, because you have access to specific information here. And so in that case, we consider that you deserve to be qualified to invest in this company.
I was literally going to ask you, is Congress listening to the Joris of the world? Are you getting an opportunity to speak? Are you getting a platform to kind of add input to, future regulatory without just having to lobby?
No, so I don't do any lobby. I write my letters myself. We don't have yet a general counsel, and I think that indeed, since Commissioner Pierce work, and also the new chair Paul Atkins, there is a complete shift with their team, the SEC Crypto Task Force.
He seems pretty more crypto friendly than maybe his predecessor.
I would say they are not against change.
Mm-hmm.
I think they are extremely competent, skilled,
Mm-hmm.
knowledgeable, and they are simply offering a tribune to everyone. And I was like very thrilled when I got offered to join a roundtable to discuss with the task force, to send a letter to them to be featured on, like we have a page right now on the SEC website highlighting the 7-point framework that I suggested.
That's amazing.
One of the points of this framework is the accreditation status, for example. Another one is the standardization. How can we come up as an industry with some sort of standard? A third one is on the explorer nodes, like a way to become an observer, so that rather than to have compliance by intermediation with a lot of delay, because reporting happens like 15 months maybe after something happened. Now you can have compliance by automation, where smart contract allows anyone to observe things
virtually real time.
Exactly.
Yeah.
And so that's a unique opportunity for the regulator to change the way they regulate, from enforcement after noticing things later, or like being immediately the one, red flag, there's a violation here, fix. That's a big opportunity for the market today to become more robust. And so I really appreciate the fact that in the US, when they decide to move forward, they do it at a pace that no one can follow in the rest of the world. And, crypto, or more broadly like blockchain combined with AI, can be the answer to all the problems that we see today: the debt problem, the lack of growth problem, and there is a significant chance that the US can, be the winner of that game. So
I actually saw a video yesterday about that. How our national debt could literally be impacted and almost eliminated, in a short period of time.
There are opportunities that some people don't see. Sometimes I'm so mad at my country, France, because we have a nuclear power for years that is generating way more energy than we need. And so if 10 years ago, when we started to advocate, or 6-7 years ago, we started to advocate as a group for mining Bitcoin, they could have just either do a state company or private one. But they had a very big opportunity to create wealth that would have not only financed the whole debt that we have right now, but that would have maintained the safety net that we have there, and all the benefits that have been built after the Second World War. And unfortunately, because the world is now run by communicant versus visionaries, by short-term vision and election versus like decades planning,
Mm-hmm.
we end up with a big loss. And when I saw a month ago that they were selling a concession to a US private company to mine Bitcoin with this energy now, I'm like, oh my God, it's even worse than I imagined, you
I
know?
mentioned this to
And
you 3 years ago. Why didn't we do this ourselves? I love it. Tell me about Fairmint, like right now, what does it look like between, say, 2018 and now? I mean, you've mentioned you and Thibaut. How big is the team? Where do you think it's headed in the next 12 to 18 months?
um, I think we moved from the R&D phase to the real D phase. Like we were a lot in research and iterating and making sure that we were both learning, testing, and be ready for the wave. The wave is here. It's time to surf it.
Hmm.
It's also a time for a complete shift in terms of positioning, because the research phase, you need to do it with people that are accepting the risk of the novelty. And so most of the time you can do that with, the small agent. Now that we have the rails and we feel good, we are at the moment where it is time to flip the script and to move from a strategy that was bottom to top to a top down strategy where we are able to address things and at a very high level.
Hmm.
And so over the last 3, 4, 5 months, we saw the huge acceleration moving from, processing $25 million during 5, 6 years to more than 1 billion in a couple of months.
That's a pretty substantial difference.
Yeah, it's almost exponential, and
Yeah.
that's due to the interest because people are not scared of blockchain anymore. People start to trust things. I have to share also that when we were on Ethereum based Solana, a lot of the board members that we were chatting with that were deciding whether they move on Fairmint or not were scared of it. They were scared of not controlling the infrastructure,
Hmm.
what data would be available publicly. And so for a private company, that's concerning. And so less than a year ago, end of 2024, beginning of 2025, I started to dig on FHE. So that's encrypted mechanism for smart contract, on ZK, the zero knowledge proof mechanism, to find ways to make things private on chain. And that's the moment where I read the white paper from the Kenton Foundation and digital assets. And Kenton is a network of permissioned agents that are running things as a blockchain, as a synchronizer. And I have to share that since we do that, the board members and the agent that we were chatting with before are not scared as they were. They value the privacy enabled
Right.
architecture of the chain. And they also, I think, feel comfortable when they see that behind Cantons, a lot of the players are Wall Street traditional finance players, banks, hedge fund, clearing companies, clearing houses. And so that has been also accelerating the move.
Hmm.
And I think it will continue to accelerate the move of TradFi moving on chain because privacy is a use case. And what was the main driver over the last 5, 7 years was transparency.
Hmm.
And people forgot the deintermediation that is paired with the blockchain. Transparency is one feature, but deintermediation is one of the main driver as well. And so if you are able today to offer deintermediation without compromising the privacy, you are able to serve like a huge market.
Yeah.
It's trillions that
Yeah.
will move on chain. And Fairmint is participating to that as a very tiny agent. But like I said earlier, when we see so many people joining that are bigger and bigger, bringing more asset under management and looking more value to the chain, I mean, it's a positive move. It means that the blockchain will become more and more a commodity. And so people will be used to it and people will have less concern. And the last thing also that I like to share is on the securities side. Because we do securities, investor won't risk the same thing as when you do coins. And let me explain in detail that, because I think it's very important for people to start understanding how blockchain can be their best friend. If you are a coin buyer, you purchase coin and you hold them into your own wallet, you self-custody. If you lose your private key, you lose your coin. That's why people say, not your keys, not your coin, right? So there is a risk here. If you decide to invest and get securities, because of the nature of the security, and particularly in our case, equity securities, that needs to be seen and tracked in a ledger, the cap table. And that requires for the issuer to either manage their cap table by themselves or to rely on a third party that is a regulated agent, like us, a transfer agent. So in the past, transfer agent was very unsexy, boring, and but the reality is that right now everyone is trying to be a transfer agent, because if they do, then they guarantee that if you lose your key, you don't lose your asset anymore, because that's security, and you can always come back to the transfer agent and say, hey, I lost my key, but it's me. Here is my ID. I am the one you see on the ledger that owns this asset. Can you cancel and reissue the asset in my new wallet, in my new portfolio?
That is huge.
It is not enough known. And yes, people are against centralization. Yes, people are against regulation. But when you invest in a company, you want to make sure that it's not tomorrow Lazarus Group that is owning 50% of this business. And so that is the only way to do that properly. And so on chain, we were among the first to build a real protocol for cap tables, where the transfer agent is absolutely core to the mechanism. And I think the world is moving to a protocolization of this activity that will allow all the players that will bring liquidity to tap into the same source of truth, which has been one of the biggest problems today on, for example, the public market, when they saw Robinhood, Kraken selling wrappers of public stocks in Tesla or even private companies, national exchanges started to be scared of seeing a fragmentation in their liquidity. So that's why, for example, last week, NASDAQ published that they were leaning to do tokenized securities. Smart move. They want to make sure that the source of truth remain the same, because if not, then you fragment. We are building the rails for that on the private market, so that tomorrow every single ecosystem, on-chain or off-chain, every single agent that can offer liquidity will be able to tap into the same source of truth wherever it is. And that's market infrastructure rebuilt for the on-chain era. I think it's fascinating.
and something that I could just continue to ask question after question, because everything you say generates more follow-up questions. But my brother, I
We'll have
want
to do
to
another episode.
well, Freya, I want to respect your time because you obviously you got a lot to do. So um, Joris, tell people where they can find out more about Fairmint, maybe who the ideal client would be, for Fairmint, and then just just close us out today with something that we haven't maybe touched on.
Yeah, so anyone who wants to reach out can go on fairmint.com or ping me on Twitter, LinkedIn. That's the easiest way to reach out to me today. And if I have a message, very simple, it's a message to founders. Like, do you want to spend your fundraising to Web2 players that will charge you for an Excel on steroid? Or do you want to embrace the whole new world of capital market, which is on chain? And I don't think that a lot of people want to continue to bleed money for this type of Excel. So happy to chat with any founder that decide to join this army of people making equity move faster, cheaper, and easier.
I love it. I love it. Joris, thanks again for just taking time today. It's been a true pleasure. And let me use a little bit of my bad French every now and then. And you said that was general reaction when I spoke French, was even smiling. So, but yeah, it's good to connect with you. Good to meet you. I'm going to Venmo you $100 and you invest it in Fairmint, and I want a 1,000x return someday on that investment. But I just really appreciate you taking the time. It's been a real pleasure to educate our audience and just to share the story of Fairmint and really just playing your part in helping all boats rise in a rising tide. Joris, thanks again. Have a great afternoon.
Thanks a lot, Kevin. See you.
And now here's a quick word from one of our new sponsors on Rising Tide Startups. Every episode of Rising Tide Startups is sponsored by Pod Brand Media. So you started your own company or branded podcast, and now it's fading. Let Podbrand give it new life. Check out podbrandmedia.com to learn more. We hope you heard some great takeaways and are now ready to take action yourself. As always, thank you for listening and helping all boats rise in a rising tide.